What's up, my devils? Good evening. Actually, it's after midnight here in New York City, so it is good morning, actually. Sorry about the delay today. I was stuck at the airport for many hours and then had to switch airports to get onto my plane. There was some delays and cancellations as a result of bad weather here in the East Coast. But I'm back. I just got in. I'm ready to record something for you guys, and I don't have anything prepared today because of my trip, so this will be completely freestyled. Before I start, I wanted to remind you guys that we're running a contest. Sam mentioned this in his last video, but here it is on our Twitter page pinned. You can click here where it says enter here, and it'll take you to this page, which gives you the details about the contest we're running. We're giving away a 2-month membership as first prize, a 1-month membership as second prize, and a 2-week membership as third prize. And to spice up the membership, I wanted to also say that I'm going to be splitting my videos once a week now into 2 parts. There will be a public video, which is the video that you guys are used to. It'll be my observations around price, and I'll get into a fair amount of detail, as you guys are aware. I tend to do that. But then there will also be a second video that I'll record immediately after, which will be specifically talking about trade setups. So how do you trade my observations that I've made, and also some of the observations that Sam has made on the counter case. One of the things we like to teach at Trade Devils is that you should take whatever the market gives you. If you're a bull but market leans bear, you got to be prepared for that. You got to learn how to short. You got to learn how to enter trade setups on the short side. And if you're a bear and the market turns against you, you need to contain your risk and be able to have the skills to flip if necessary. So there are a lot of different setups that you can look for that allow you to win both ways. And so that's kind of been a big focus of my trading throughout my career. And so I'll be talking about that in the member-only video. Also, you guys should be aware that we're re-recording and re-releasing all our training material to be updated with the latest and greatest. One of the foundations of Elliott wave theory is obviously that there are rules and guidelines that you must adhere to apply the rules correctly. Unfortunately, some of those rules sometimes change, and there isn't an easy way to get a hold of the latest rule changes aside from contacting the governing body, which we've done. Actually, all our senseis and myself have been in active dialogue with them through the certified portal, and we have updates to some of the rules. I wouldn't say huge updates, but there are some significant ones, and more importantly, there's been some nuances inserted into the guidelines, which I've found quite useful, and I talk about a lot in my videos. So I will personally be redoing all of our Elliott wave theory training, and I will do 1 video per pattern in which I'll discuss all the latest rules, all the latest guidelines, as well as my personal observations and preferences for how to use these patterns when identified and how to identify them better. And then as a bonus, because we're all active crypto traders at Trade Devils, we will also include our Trade Devils observations for some of these patterns and how they might be different, if at all, for crypto. We also have a bunch of training already done for things like channeling and trading strategy for traditional assets. Sam has a bunch of videos on that are very popular and have had several of our members profitable on the traditional day trading channel already. So really excited about continuing to supplement our training material with the latest and greatest material. Anyway, I'm going to get to it right now. And as I mentioned, because of my airport snafu, I did not have anything prepared, so you will see a truly freestyled session. And I'm going to start with a chart on Bitfinex, which has been, at least for the past week or so, a little bit of an anomaly. You know, I've noticed that some of the spikes don't coincide with some of the other exchanges, etc. So as you guys know from my last video, I like to be quite anal about major exchange price action. You know, if it's a major exchange, a reputable exchange with a decent amount of volume and the price says something different than the other exchanges, then I got to make all my counts work for that exchange as well. So I'll be charting Bitfinex today. So here it is, Bitfinex, 1 hour time frame, and zoomed into the move that has been captivating our attention for the past many weeks. The past few weeks, I've covered the later parts of this move in a lot of detail. So since last week, if you recall, I channeled this structure here and demonstrated some of the techniques I use to analyzing parallel sideways action, what I call sideways fuckery, and predicted that based on some non-Elliott wave analysis, we did some Elliott wave too, but just predominantly based on reads from candlestick activities and channel behavior, I thought it would go down. It was a high probability trade, and sure enough it did. Could have easily gone up too, so I'm not saying I'm right or not, just reminding you guys that we had recorded the video around here, and it's now here. I predicted it would go down even further over time, but a good amount of action for 1 week. And so the question is, this is still internal to this low or this low, depending on which exchange has the low for you. So is this a corrective structure that's correcting a potential motive move from here to here, as Sam has it in his bull count, which is a very credible count, given in some ways this move has broken a channel, depending on how you draw the channel. But if you were to channel the move without Elliott in consideration, just as a straight trying to capture all the price action neatly in parallel channel, this broke it, right? So it is a credible case that we're done going down, at least for now, and we're headed up. Of course, anybody who's worked with channels knows that you can redraw them very easily, like this, and tell me that median line doesn't make a lot of sense, right? This still looks very much like a credible channel too. So the bear case is also obviously alive and well. But my point is, what is this is going to be the topic of discussion today. What I claimed last week, I had this move as a 4 of some sort, and I give you 2 varieties of options. One that had an expanded flat, where you had an ABC up here, ABC down here, and then a 5-wave move up here to complete an expanded flat, or an expanded flat with a much more expanded B. So ABC up here, A, B, C down here, and then a 5-wave move up to put the C in here, right? So I thought maybe the price would continue to go a little bit further. I thought that it would reach at least the price extreme of this corrective structure, which I have it as a 4 of a lower degree. If you guys recall, I drew a channel like this. What's going on here? Yeah, so I drew this channel here. Well, it's actually slightly below, but yeah, you guys get the point. And did a bunch of analysis around this with just channeling technique, as well as candlestick analysis, and then of course Elliott. But I thought this might even break this channel a little bit before coming down, but it didn't. And as a result of that, I don't think it quite reached the price extreme of here. So this would end in a very, very slight truncation. If we had it as expanded flat here, A, B, C. And so now I'm going back to my old original count of this being the A, this being the B, and this being the C. I think that's just geometrically cleaner. It's a higher probability count, despite the fact that the C is a little bit long. Not hugely. It's still well within the realm of reasonable probabilities, but not exactly 130%, which tends to be the sweet spot for it. A little over 1618 actually. But nevertheless, I think that's what this is, a 4. And then we're going down for the 5. So if you guys recall from a video I did, I think 2 weeks ago, maybe 3 weeks ago, I had this as a very well channeled 1, a 2. And then we were trying to debate whether this was the 3 or this was the 3, or this would be the 4 or the 3, and the 3 would be put down. Now, given the structure and the fact that it broke this channel here, I'm calling this the 4 of the whole move as my primary count. So I'll have the 3 ending here, 4, and now we're going down for the 5. That's what I believe is happening. But if you guys recall, there's also a very credible case that has this as a 3-wave structure, a zigzag down. So the question is, where's the A of the zigzag, where's the B, and where's the C? Or is it a double zigzag, something like A, B, C, and this is an X, and then there's another A, B, C. All of those things play. And the reason why it's very difficult to choose one over the other is, as we talked about a couple of weeks ago when I did the detailed Elliott count, the lack of significant retracements here and the fact that so many different options channel reasonably well makes it very difficult to call one count higher probability than the other. Of course, if you've seen my videos from the past 3 weeks, you'll know that I'm leaning bear on this move. I don't think it's done. I don't think this is a 1-2. I think we're still going down, as you can see from here. But whether you like this count or something else doesn't matter. The point is, this corrective structure to me does not look done. And so that'll be the focus of today. We're going to analyze this move, since we already did this over the past few weeks. So whenever you're trying to make a case for one side, I think one of the things that I do, at least mentally, is to try to discount the most probable opposing case, just to make sure that you're trying to contemplate something that isn't running into the face of a very high probability obvious count. So if this were a 1-2, sorry guys for that little noise, that's my, we have a deal with JAFX, which is a broker that has Bitcoin CFDs that I trade quite actively as well. You can get up to 500 or 100, is it 100 or 500? Some obscene amount of leverage, and you can short to the dollar because it's CFD. So I do a lot of my shorting via JAFX, and if you hear that boing noise, then it's probably some alert that's triggering that I don't know how to turn off. So I apologize for that. But obviously, I'm short Bitcoin, given you're hearing that little alert. Okay, so let's see. I was talking about, yes, so this count, how probable is it? Well, let's see. If this is a 1 and then a 2 down, you would expect the highest probability retracement for a 2 to be between the 50 to 618, right? So actually, let me zoom in a little bit here. And even though it's above that now, it did retrace significantly below even the 65, which is a little trade devilism that we do to capture some of the wicks below the 618, especially with the more aggressive algos. You want to leave a little bit of room for going below the golden ratio. But this went, halfway between the 65 and the 786. So, pretty deep for a 2. The other thing I'd observe is that if this is a flat correction, whether you have it as an A, B, and then a super long C down here, or as Sam has it, which I think is the higher probability count, an A here, an expanded flat B here, and then C here, there's a couple of anomalies with that aren't super high probability. One of them is obviously it's a flat correction, which is a sideways pattern, and the majority of 2s are sharp, meaning zigzag family patterns. So that kind of sticks out in combination with it being so deep. You can have flats that are deep for sure, but not the most probable. And moreover, the C of this purported expanded flat is well beyond the 1618. So you have a structure that is quite an ugly move up, and I think if you guys know me from my Discord, from my videos, ugliness to me is significant. I think impulses, especially the clear ones, tend to be beautiful and clean and impressive, and this is just all over the place. And there's this structure here that so many different ways to count it that it's hard to even come up with a good case for one. But this thing's ugly. I think all of us would agree on that. So that's a factor. And then this thing being so deep for a 2 as an expanded flat is also interesting. And the C being so deep, to me, makes it a lower probability count. Very credible still. Nevertheless, when we're talking about a correction that is still ongoing and there's more down, it's not like we're facing a very strong case on the bull side. Okay, just wanted to note that. So what about on the bear side? Does it measure well as an impulse down, or at least in progress or complete, depending on how you have it? Well, I have it as still going on. So let's see how that measures. Let me zoom into a smaller time frame here. This is the 15-minute. All right, so I have this as a leading diag 1 with a zigzag 2. A, B, C. I'll label it in a second. I just want to go over the count. So 1, 2. I have all of this, the 3. I have this as a 4. And then I have a 5 down to put the 1 of a 5-wave move down. Okay? So just to mark it up, to be clear, I have this as a leading diag A, or sorry, 1. Zigzag 2, you can see it here. 1, move up, A, B, C, B, and then an impulse up here for the C, A, B, C, 2. Then I have it as a 1, 2, 3, running triangle, A, B, C, D, E. 4 of the 3, and then 1, 2, 3, another triangle, which is 4 of the 5 of the 3. 1, 2, 3, 4, A, B, C, D, E, and then down. Okay. I have this as a 4 in progress, and then the 5 down. You guys have seen this chart. We shared it on our Twitter because I put a live trade on for this thing on the way down, shorting this move. Shorting this move, and then buying this move. And this was a precision strike. It measured so well that a lot of our members were able to get it not quite to the tick, but very, very close. And obviously a nice pump here. So, okay, so let's see. I initially had it as 3, 4, 5, which is how this is still a very credible count. Okay. But the reason why I'm switching to the other way, not because I'm trying to be bearish, but just because the geometry to me makes more sense with this 4, which is substantial, and also a sideways pattern. I have it as a expanding diag, or sorry, as a flat correction. And this is a sharp 2. And you'll see the measurements in a second. The geometry suggests to me that this is the more likely of the two. It doesn't mean that this being an impulse down, this being a 2 up, that could potentially retrace all the way to the 618 on the way up. Doesn't mean that that's not possible, but right now I'm favoring this as a 4, and I'll explain to you in detail as the focus of this video as to why. But one of the simple things is, if this is the 4, and this is the 2. You guys have heard me say this, that the temporary channel for Elliott waves is to connect the 1. Man, I wish you could pull on both ends of the channel. It makes charting it very difficult sometimes. But here we go, right on the tick here, on the tick here. So, oh man, I'm gonna have to flip this. I don't like how the handles are only on one side. It's annoying. But okay, so this is the Elliott temporary channel. You guys have heard me talk about this a lot, and temporary channel is supposed to project where the 4 ends, right? Which it has it here. You connect the 1 and the 3, and you anchor it off the 2, and then it should tell you approximately where the 4 ends. And what I said was it typically breaks the channel has been my experience more than 50% of the time. And it does here. But then what it does is it goes back into the channel, right? And I don't love that. To me, for a classic impulse with a sideways 4 and a sharp 2, and because of its sharpness, the 2 tends to take half or less of the time of a 4 to put in, the 4 should change the trajectory of the channel. I also think that the 3 tends to be the sharpest slope. And so when the 5 comes in, it has a little bit of a different slope because of a lot of the consolidation and the basing that's happening at the 4, right? But here you see that the sharpness continues pretty much the same exact slope. Here, here, here. It's all looking very much like one move. Obviously the 1 being a diagonal, is the slope would be something like this. But then the slope of this channel continues all the way down here. So it makes me think that geometrically this is all one move. Okay, the way I had it here. Makes me think that this is all one move like this. And so if you have it all as one move, let me put it back now to the, and you have this as a 3, right? And you anchor it off the 2 to project the 4. Well, the 4 clearly breaks the channel, and in my opinion, as it should. The guideline says that the parallel channel projects the 4. I think more often than not it doesn't. And the other thing about this 4 is it measures so well, right? So I'm assuming, I mean, it might have another leg up here, which we'll talk about, but let's just say that for the sake of charting it now, that it's in, which I also think that it very well could be. And so it would look like this. Okay. By the way, look at this median line, right? 1's on the top half. Almost all of the 3 is in the bottom half, and then the 4 takes the 5 down to the other top half. This median line for the channel being a very significant player in the geometry. But not only does this channel well, but also it measures very well. Let's see. So if this is a 2, this being the origin of the 1 or the 0, so I'm going to measure off of here, off the beginning of the 2, to see what the retracement level is for this alleged 4, right? And you go right down to where the 3 is. Well, look at that. It lands right in the high probability zone for a 4, 382 to 50, right? The other thing that's notable is this parallel channel that I drew last week. You guys should know this by now because I keep saying it, but one of the significant guidelines that I've found super helpful in my impulsive analysis is to project the 4 to be ending near or at the price terminus of the 4 of the lower degree. So if this is the 4 of this entire impulse down, and this is the 4 of this 3, then this is the channel that contains that price action, right? This is the price span of this 4. And look, it's right there and might even go up to touch the upper boundary, just like we talked about with this move, right? We talked about the same exact analysis at a higher degree with this move here, where this was the 4, and I drew a channel here projecting where this might end, and sure enough, it didn't quite reach it, but damn close, and then it fell down, right? So I'm thinking something similar is happening here. Okay, so you've got almost a near perfect measurement, right? Still closer to the 382, but between the 382 and the 50, contained right in the price span of this 4 of the lower degree. Very strong case for this being a 4. Now, how does it measure? How does the 3 measure relative to the 1? Well, it's an extended 3, obviously, but you should expect high extensions after a leading diagonal 1 that gets retraced almost fully, like a leading diag normally does. The guideline is near 100% retracement. This is damn close. Okay, but so this is the length of the 1 off the 2. What do we get for the 3? Right, I mean, within a few bucks of the 4236, which is a typical 3 is 1618 of the 1. A highly extended 3, these are the probabilities. The most probable is 261, 361 and then 423, right? So very, very close to this. Now, if this were the 3, and then this triangle was the 4 of all of this, and then the 5, it doesn't measure quite as neatly, right? It's 2618, but you know, you've got a significant difference between the 2618 level and this level, the price low of the 3. This is much closer to Fibonacci strike right here, right? So it measures very well as an impulse down in progress, is my point. All right, so I made the point that this channel as well. So I'm going to take this out because I'm going to do the same analysis I did last week. I'm going to pull this down. This is something that it's not Elliott or anything. It's just something I personally do when I analyze sideways moves. And I'm going to pull this up. And as you can see, this median line, very significant. It's you know, as it did for this move. Does this look familiar, guys? It's almost like a little fractal of this move that we did last week. The same analysis, right? The first third contains the move up here. The second third contains the bottom, and then the last third contains the move up here before it faces final resistance and then should move back down, in my opinion. And the reason why I say that is, if you look at some of the same candlestick analysis that we did last week, this long green thing and then a much shorter one with a huge wick here, and then a series of little spurts that you can't even see green at the 15 minute because they're so short, and all these violent wicks that get rejected, and no bull wicks from here on out. No bull wicks, no supportive wicks. It's all rejections, 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 rejections. For the same reason as I thought last week this would happen, I think this will happen at a smaller fractal degree here. Same exact analysis. I think it'll break this median line down and eventually this channel down. There's obviously another channel that you can draw for the actual corrective structure itself in isolation from all this other stuff, so we can do that. See if we get any geometric clues. And especially with these long wicks, I kind of tend to leave them. If you wick it off, it'll be the same median line anyway, just to kind of contain the move. You can do it either way. There's no right or wrong with wicks. But you can see this median line is super significant, and it's coming. There's going to be something going on here where it faces resistance from this upper channel boundary on the parallel channel, and you know, this median line is about to hit it if it hasn't already gotten rejected and is on its way down. Okay, so I want you to remember this because I'm going to do something now. I'm going to draw this as white. I'm going to do something here that will hark back to some analysis we did a few weeks ago. I think now I need to move it to the 30-minute maybe. Yeah. So our members will have seen this already because when I was on the plane, I posted it quickly on the live trade channel just so they could maybe get a clue if they wanted to trade it. But so if you guys recall, I did a very similar analysis here, with this being the 4, right? You guys remember this? For this, and I pulled it forward here, and I projected where this might end, and it came very, very close, right? So, but I want you to pay attention to this because I found it pretty interesting. This, to me, looks like a fractal of this. And this is what I'll leave you with today because I want to keep it short to make time for the trade setup video for the members. But, okay, so you can see the similarity right in the shapes, and no argument there. But I'll show you how similar it really is. So if you channel this, which is the corrective structure itself, just like I've done here, this median line is once again just such a good guide for this entire move, right? Just like here. And where are we? We're right around here, whether we're either here, or maybe even here. So if there's much more to go up, it ain't much, and then Look what happened here. I'm not saying just because it happened in this fractal that it must happen here, but it certainly does coincide with this very well channeled, very well measured, very sensible impulse down, right? But here's the other thing. Let's measure this thing. Let's actually measure this thing. Okay. Now, I'm going to go at the same degree as this. If you guys remember from my count, I had 1, 2, and then this whole thing to 3. 1, 2, 3, 4, 5. That to 3, right? Sorry. Did I have? Yeah. And then I had this as the 4, and then this thing down here, the 5, right? So 3. Let's call this the 4 right here. This is the 5, right? All of this sub-minuet 3, so lower degree. Let's measure the Fibonacci retracement of this structure. Again, not from the price extreme of high of the impulse, but from the 2, just like we did here, right? See the dotted line? Off the 2, not the 0, which would be up here, off the 2. So again, this is the 2. I'm going to measure it off the 2. Down to the bottom of the 3, which is right here at the bottom of this parallel channel. Well, what do you got? If this is not a fractal, I don't know what is, right? Right smack in the middle of the 382 and the 50 once again. I mean, this is like the mini-me of this. It really, you know, from a Fibonacci perspective, from a channeling perspective, from the sequence preceding it looking almost exactly the same, right? I mean, this is also the mini-me of this. And then, you know, it had a sharp move down here. I mean, I bet you if I measure the slope of these median lines from the channel, they're probably like very close or identical. Let's see. So the slope measurement tool is 37 degrees. What is this? I mean, 36 degrees is off by 1 degree. I might have just misclicked it or whatever. It's the same. This is the same thing, guys. It's a fractal with slightly different wave shapes. But look at this. Same fib retracement. One with a deep 2, one with a deep 2. Very sharp 3. Very sharp 3. Sideways fuckery for the 4. Same here, contained in this parallel channel. And then a sharp 5 that ends here. And, you know, this one may or may not end here. But look, what else do you see, guys? Look at this. What is this? Major algo target. Front running the major algo target to stop the 5, right? Well, what do we got here? Major algo target to stop the 5. Now let's see if this measures well. If this 5 right here measures well, okay? Especially for a very small 1 and extended 3, the guideline of equality doesn't usually apply because then it would be a failed 5, right? If you project this length at the end of this 4, you wouldn't even get past the channel, let alone, you know, go down to a new price extreme low. So the much cleaner and preferable way to measure the 5 then is to take it from the 0. You've heard me say this a lot. It's actually my favorite way to measure project the 5, all the way down to the end of the 3 and then anchor it off the 4, which, you know, depending on where the 4 ends, let's just say it ends with one little more push up to hit the upper boundary of the channel. Although I said that a couple of weeks ago and it never did here. But let's just say it does this time. What do you got? 618 being the most likely price relationship, Fibonacci relationship for the 5. Well, look at that. Look at that. Look at that. Super high probability count for an impulse down. I mean, I don't know how you can get more probable than that. Maybe like this 3 isn't as extended. It'd be cleaner 1618 or something. But, you know, you should expect a highly extended 3 after a leading diag that gets fully retraced. That's the purpose of a leading diag, it's almost an extension of the correction that preceded it to further base the price action, and then boom, violent move down, right? Last thing, wouldn't be a trade devil's chart without it. Let's put a pitchfork on it. Well, this Pitchfork certainly it misses the median line, but not by much. Very, very close. You might want to put a shift on it. Let's see. Or modified shift, maybe. See which one looks better. No, I think original flavor looks better. Right, so, I mean, you could screw it with the pivots to go here and look at that. Right? Not at the price extreme, but at the sideways extreme, if you call it. And it hits the median line to the tick. Well, let's see. What if we projected it the same way here? I actually haven't done this, so I'm doing it live with you guys. Well, look at that. I mean, let me zoom in. So this is a little bit falsely precise because we haven't actually put in this 4 yet. Or maybe we have. Maybe this is. I did it on the sideways extreme, so I'll do it here. And look at that. Median line right where the 618 and the 236, minus 236 algo target project with, you know, slope that if it's aggressive like this one, it may even come to the left of it, but leaving a little room for more sideways slope from this very brutal 3 projects so well. So, not a bunch happened since last week. This did move down as I expected. I'm expecting it to move down again, and my target would be around this level. And that's it, guys. Again, sorry for being late, but I look forward to the next week's video, and now I'm going to get to the trade setups for the members. Have a good night.